NFP and PMI in focus. Hello and welcome to our weekly outlook. Entering to the new quarter, non-farm payroll reports on a Good Friday creates a very short week. With the huge data, while President Biden's speech on Wednesday also will be in focus. Don't forget that this Friday will be the Good Friday holiday, and Australia, New Zealand and many other European centers will be closed. In the US, New York stock market will be closed, but it's not the US government holiday. So NFP data will be published, and as always it will be important. Let's take a short look at the week ahead and see what we are going to have before Good Friday. Number 1. US labor number. As always, US labor data, especially NFP numbers, will be important in the first week of every month. On a Friday, to decrease the 6.3% unemployment rate to the 6% of expectation, we are expecting another 4 to 500k increase in the non-farm payroll numbers, after 380k increase of the last month. Estimated numbers based on the recent decline in initial jobless claims thanks to the stimulus packages and vaccination progress. However, as long as there are stimulus packages and the government pays part of the salaries and the bonuses to hold the employees, it can be early to feel confident in this area. Currently, there are almost 19 million claims to unemployment insurance in the US. In the coming months, we are expecting higher unemployment numbers. While the US average unemployment rate is 5.8%, the current 6 up to 6.3% is not so bad and high. Besides unemployment numbers, we will have the work week number, which is expected to raise to 34.8 from 34.6 in February. And since more jobs are opening, the number of lower salaries are increasing, especially for the cafe and restaurants workers, which pushed the average early earning to the fall to 4.5% in March from its 5.3% of yearly of February. As what usually happens in positive NFP days, we are expecting higher rate for USD and a crash in its crosses, like euro and the pounds in the currencies and the gold in commodities. Last week, Euro-USD closed at its 4-month low, expecting to see even lower numbers with the positive NFP data. Number 2. GDP in UK, Canada and Russia. Wednesday will be the UK and Canadian day, as both countries due to release the GDP numbers. The UK number will be for the quarter for 2020 and Canadian numbers for the January 2021. After 0.1% growth in December for Canada, it's expected to see 0.5% monthly economic growth, while for England, we do not expect any changes in its 1% economic growth of last quarter. These GDP numbers are not expected to reflect the market that much, as based on the prior data, market participants are already waiting for exact same numbers. Number 3. The key inflation numbers. Germany on Tuesday and Eurozone data on Wednesday will get the most focus in Europe. The latest raise in the oil price and VAT charge in Germany is expected to temporarily increase the price and get closer to the ECB's 2% target. The ECB recently revised the forecast for the inflation are 1.5% for this year, 1.2% for the next year, and 1.4% is for 2023. With the ongoing price pressure and the weaker demand in the Eurozone in the midterm, still the outlook remains below the ECB's inflation aim. Spain, Italy, France, Swiss, and Australia are other countries that are planning to release their inflation numbers in this week. Better than expected numbers can help the euro to gain in the short term part of its loss. However, lower numbers than expected will hit the euro much harder, and we can see the even lower numbers and lower rates from this. Number 4. PMI data. Manufacturing PMI is one of the most repeated data of the week, while most economies planning to release their number in the next few days. Chinese manufacturing on a Wednesday, more than everything, will be watched by energy market. Raising or lowering the Chinese economy was one of the most repeated questions of oil investors in the past months, as there was a big concerns on some part of the Chinese economy, like construction and export numbers, as European import lowered at the pandemic. And recent warning about the constructions bubble have been repeated several times. Positive data will put the oil price to go and express the higher numbers, while missing the expectation will push the prices to see the lower numbers. The Bank of Japan's quarterly short-term survey of economic conditions, universally known by its Japanese name of Tankan, which will be published on a Thursday. The Tankan diffusion indices for the biggest companies, which market participants closely follow that, are expected to raise and boosting the Tokyo's stock market. Other than Japan and China, Australia, Spain, Russia, Italy, Eurozone, and United States also due to release their PMI data. Thank you for watching this video and hope you're gonna have a great week ahead.